Today, we will analyze the Fed meet and expectations from the RBI, US versus Indian Indices Divergence, and a lot more. Hello, everyone. Welcome to Midweek with Indiacharts. This is Shilpa Raidas, and we welcome you, Jay.
Hi, how are you?
I am very good, Jay. How are you?
All good, all good.
Wonderful, Jay. We are excited for this midweek because we have got a lot of questions for you. Starting off with the first question, Jay, what were your key takeaways from the Fed meet last week, and what are your expectations from the upcoming RBI policy, Jay?
So I think one thing that was very clear from the way Fed communicated was that instead of, market was pricing in 6 rate cuts, okay, and Fed sort of explicitly told that they are looking at 3 rate cuts, okay, which means that somewhere the market needs to do that adjustment. And in fact, after the Fed meet happened, there was there was a non-farm payroll data, okay, and that saw a blowout number, okay, which was, I think, no way supportive of a rate cut immediately, especially when there is a Fed meet in March, okay. So I think one thing is very clear that the Fed meet in the March, around that time as well, there is not going to be any rate cut. In the March meet, Fed is going to guide as to how they are thinking about the market, and how they are thinking about the entire perspective, like how the economy is doing, how the data points are behaving, and based on that they will give their best projection. And most likely, if we see the pattern of the way Fed has behaved, they have done what they have said, okay. So that's where I think the March meet will be keenly watched by everyone, because that's where they are going to guide the market as to how they are thinking, and what is the number of rate cut that they are factoring in. But as of now, what I could gather hearing Fed Powell's speech is that 3 rate cut is possible in this financial year. In this calendar year. Then they will see how things unfold. But the other thing which Fed also said, that they are very confident of inflation cooling off, okay. It is just that they want to see a bit more data points for that, okay. So in that sense, the rate cut is coming this year, that is a done deal sort of thing, okay. The only thing which I fear, and I think that is something that market is so far not discounting, is that there is a lot of geopolitical risk that is developing, because US is attacking Iran. You see those sort of news very often. Israel sort of now trying to go to Yemen and attack a terrorist organization over there. And these are all developing things which can be a spoil sport, basically in this rate cut, what is very widely anticipated. So these are few things that I will, I'll watch and I'll keep in the horizon. If there are any developments in this case, what I just mentioned, basically the geopolitical pressure, if that persists, then there can be pushback on rate hikes, and which will sort of be negative for the equity market. Now, when it comes to the RBI meet, I think that things are very stable in India specifically. And RBI's mandate is to control the inflation and bring it to the range of 4 to 6. It is somewhere near there. So probably what I would expect is that RBI would stay. It will keep the repo rate unchanged, and the guidance would be more like they would want to see inflation being sustainably at this point. And later, when they get that comfort, that's where maybe they may want to cut the rates, or that's where they will think of cutting the rates. But understand one thing, I don't think it can so happen that India will start cutting rate ahead of US Fed, okay, because that will then put pressure on the currency.
Right.
And so those all things are there. So basically, from the RBI meet, I don't think that there could be any big outliers or big surprises that we can expect.
Wonderful. So thank you so much. That brings us a lot of clarity. We will definitely look forward to your feedback the next week as well on this. That brings us to the next question, Jay. What do you make of the divergence that you are seeing within the US indices and the Indian indices? And what's your approach? What's the approach that you're taking currently, Jay?
Right. So I'll just quickly share my screen. So see, when we look at the US indices, okay, there seems to be a lot of divergence because as you can see on my screen, I mean, this is the Dow Jones transportation, okay? And when you look over here, you know, this was the high point which was made, then this is the high and this is the high, okay? So basically what we are seeing is lower highs over here. But when you see the Dow Jones, Dow Jones Industrial, okay, that index is actually making higher highs, as you can see over here, okay? Now, normally when you see such sort of things, I mean, these are classic intermarket divergence, where, you know, the DJT, which is the Dow Jones Transportation, that is making lower lows, I mean, lower highs, and Dow Jones Industrial is making higher highs, okay? These sort of divergence, you know, usually play out in the medium term, okay? And you know, sort of something like this has started to happen in the Indian indices as well. So I'll just come to that in a while. But even when you see the US index, like the Russell index, okay, which is US small cap 2000. So if there is, you know, such a big, if there is such bullishness in the US market, then why is it that, you know, the Russell index is falling down, okay, and it is not performing well? So again, you know, over here also, when we look at the broader picture, what is happening is that the Dow Jones transportation, you know, I mean, Dow Jones industrial, that is rising higher, but Russell is not making a newer high, okay, which again is a divergence. Now, what is happening in the US is that most of the gains are concentrated in the IT, I mean, over there, basically the NASDAQ index, okay, which seems to be rising higher, and that is taking the, you know, Dow Jones Industrial higher, that is taking S&P 500 higher. But the places where, you know, the IT stocks or the NASDAQ components are not there, you know, those all indexes are not making higher highs, which is sort of telling you that the breadth over there is narrow, okay, which means the market is rising only due to fewer stocks, okay. Now, you know, those who don't know, Dow Jones Transportation, okay, it had peaked basically in 2018, okay. So let me show you the chart. Sorry, the system has got a bit slow. Wait, let me show you in the other one. So when you see the Dow Jones Transportation, okay, and when we look at the 2018 sort of levels, you can see that somewhere over here, you know, Dow Jones Industrial, I mean, Dow Jones Transportation had peaked, right?
Right.
This high was not a newer high. I mean, it was a lower high, okay? But at the same time, when you see the Dow Jones Industrial Average, okay, it made a newer high in 2020, okay, just before the COVID fall. So, you know, over here as well, it was an intermarket divergence, wherein Dow Jones Industrial was making a higher high, but Dow Jones Transportation was not making a higher high, okay? Now, something very similar is happening right now as well, where you are seeing that Dow Jones Industrial is rising higher, but Dow Jones Transportation is not rising higher. Okay. So these sort of intermarket divergence usually doesn't end up well. Okay. And so you know, these are significant risks that we are facing right now. The only thing over here is that so far we are not seeing a trend reversal, especially in case of Dow Jones Industrial. Once that happens, I think that things can get a bit difficult in the US index. Now, like I was telling you, that these divergence that we are seeing in the main US indices, okay, something very similar seems to be happening in the Indian indices as well. Okay. But this is on a much smaller scale that we are seeing right now. Okay. Because over here, you can see that the Nifty index had made a higher high over here, right? And this week, it has again retested that. But when we look at the small and the mid cap index, they are continuing to rise higher. Okay.
Right.
And so similar case is the small cap index as well. In fact, it is much more stronger than the mid cap index. But now when you look at the bank Nifty index, okay, which is like 1/3 of the Nifty index, that is not rising higher. Okay, which means that Nifty is sort of like this, bank Nifty is like this, and small mid caps are like this. Okay. So one is making lower highs, one has made almost equal high, and one is making higher highs. Okay. So again, these sort of intermarket divergence that we are seeing, these are, these are initial warning signs that we say. And this always we have to combine with the big picture. Okay. Because what will happen is that, one of them is basically wrong. So, like in the US indices, I showed you DJT and DJI, which is transportation and industrial. Okay. Transportation is not making a higher high, but industrial is making a higher high. Correct. Now, in this case, one of them is wrong. Okay. Which one is wrong is something that we have to figure out when we look at the larger picture. Right.
Okay.
The larger picture is telling us that US indices is sort of top heavy right now. Okay, which means that there is sort of this distribution that is happening. When I look at the US index, I actually sort of find very much US index behaving like Nifty was behaving. Okay, so you can see in this phase, Nifty was making higher highs, right? As you can see over here,
Yes.
right? It is making higher highs, but when you look at the mid cap index, you see what was happening over here. It was actually making lower lows.
Okay.
Right. Now, this is what seems to be happening where S&P and all, they are making higher highs. Right. Even this high is broken now. But when you see the US small cap Russell, okay, which is basically this, it is significantly below the previous high. Right. So, these are not good signs that we are seeing right now. And whatever, things that you study is telling us that fundamentally, things are not that great. But right now, liquidity is something that is supporting the market and that is fueling the rally. So that's where, we are sort of cautious right now. Okay. And then, you asked me that what will the approach be? Okay. So then the approach would be that at any significant pullback that we see, okay, that will be the point when we will start considering that, what is looking good and where should we go, right?
Okay.
I mean, where should we invest? But investing or being very bullish without any major correction, okay, only this much correction, I mean 3-4% correction that we have got, only in this 3-4% correction shall we go, shall we be very bullish and be 100% sort of invest at this point? The answer would probably be no, because now the risk of a correction has increased meaningfully. Okay. So that's where, at this point of time, our idea would actually be to protect the capital. Okay. And once we get a meaningful correction, that's where probably we will think, whether it is a good time to invest or no. In fact, when you look at the Bank Nifty index, okay, so you just observe the pattern of the Bank Nifty index, okay. This is the daily RMI, right? Daily RMI was in sell. It has come back towards the zero level, right? This is what ideally we wanted, few days or few weeks or 1 2 months back. Nifty has sort of done that on a daily scale, right? Now, when we look at the small mid cap, no, they have still not done it. Okay, they have not come back towards the zero line. This is the mid cap index and this is the small cap index. So over here as well, you can see they have not come back towards the zero line. In fact, small cap was very much near the zero line, but it has not come back. Okay. Bank Nifty, on the other hand, when you see the weekly chart, okay, the RMI turned bearish and it is now sort of correcting. Okay. And this is where we are seeing weakness in the Bank Nifty index as well. Now, I think similar sort of thing will follow in the Nifty index and eventually in the small mid cap index as well, because you can see that the momentum over here seems to be losing pace. Okay, which means that possibly this RMI on the weekly chart will get into the bearish mode. And ideally, what we would want is that once this correction has happened and it has come back towards the zero mark, even on the weekly chart, it will be much more appealing buy, and I would be very sure that around this point we will have a very good risk reward. Okay, now if you see in the small mid cap index as well, okay, something very similar is happening over there as well. You can see that the momentum seems to be losing, but when there is a correction that we see, okay, that's where I think the RMI will again turn into bearish mode. And that's where, if it completes the cycle, that will be the most comforting factor. And that will, sort of make us bullish and make us relook at things with a positive bias. But until that doesn't happen, we would be little skeptical. So in terms of approach, like I said, we would be cautious at this point of time. And we think that there is a correction that is around the corner, and we'll wait for it patiently for that to unfold. Once that happens, we will be much more open to looking at things, constructive.
Okay, so cautious and patience is the mantra here. Thanks for that, Jay. So Jay, at what point will you change the stance and which data point will you be looking out for on strike?
Right. So one thing that I told you was, we will be happy to see if the RMI on the weekly chart as well, it come back towards the zero line and we see a meaningful correction. So that was one. So that will be one point that we will watch out for, and that will make us turn bullish. The other things will be that if you see the FI's positioning, okay, so whenever it reaches an extreme, okay, basically over year or over year, that will be sort of our action point. So in the month of December, when the FI's positioning reached that extreme point, okay, there we were anticipating a correction. And so far, the correction hasn't been that great. I mean, the correction has happened, but it is just a 1,000-point correction that we have seen. Okay. Ideally, what we would expect is that, right now, because for every correction, there will be a reaction as well. Okay. So what we are seeing right now is possibly a reaction, or maybe this could be that last, sort of distributive leg of up move, okay, wherein it rises a bit higher, and in that process, we even see the FI's positioning turning back to maybe, coming back towards the zero line or something like that, and then we'll see the correction. Because see, even over here you can see that while the positioning, whilst in terms of trend, the FII's positioning was, going towards that short area, but we had this bout of pullbacks in between. Okay, in the FII's positioning, which means from negative they were, sort of cutting their position, and that was sort of leading to a pullback in between. Okay. Something similar possibly seems to be happening over here. But ultimately, what I would think is that the FI's positioning may go back towards this, 170 sort of level.
Mm.
And that will again make us probably bullish and, make us look at things a bit differently. Okay. But until that doesn't happen, probably we will be patient and we'll see how things unfold. In fact, now the DIA's positioning is also sort of getting a bit interesting. That is because, see, when I draw this horizontal line, okay, when I draw this horizontal line to where the positioning of the DIIs is, okay, so you can see that in the past, around this point, we got a peak. Around this low, we got a peak. Here also, there was a peak, okay. So it was only at this point where the positioning was only till, only till this point, okay. But now we can see that over here as well, when the DIs were short, okay, we got a minor peak, okay. We are now reaching over here where potentially a peak can be. In fact, it was only in 2021 where the positioning went, they were so short that it went almost to say 80,000 contracts or so, okay. And only then they peaked. In fact, even in 2023 also, you can see that the positioning had gone north of 60,000 contract. And over here you can see the positioning, and you can see that the Nifty index had made a peak over here, okay. It declined and then there was this negative divergence that we could see. But yes, so basically the point is that when the DI is positioning, it sort of reaches that extreme, which is around the 60,000 contract, that's where it becomes interesting, and probably a peak could be around the corner. So, in the next few days, I would be watching the DI's positioning also very closely. And if at all that reaches an point towards, say, minus 60,000 mark or so, that would be the point where we would think that now a top could be much more reliable, and that could be in place and we can see a correction. Then the next thing that I would watch out for is that the 20-day AD ratio. Okay. Normally what happens is that once we see a meaningful correction, okay, like you saw over here or over here, that's where this ratio turns towards the lower line, or the first line on the lower side or the second line on the lower side, right? So when this ratio would come towards the second line on the lower side, that will be a much better case of a buying opportunity, okay, or at least to think that a short or a medium term bottom could be in place, okay. So meanwhile, what will happen is that if this ratio has to come down over here, you will see the RMI also on the weekly chart, coming towards the zero line and completing the cycle. So all these factors, when it comes together, okay, that will sort of give us much more, comfort in thinking that a smaller, that a short term or a medium term bottom could be in place, okay. But until these things, doesn't happen and they lie in between, that will be the point where we will be patient and we will wait to see how things are unfolding, okay. Because we are not right now in a hurry to be extremely bullish or extremely bearish. So yes, the data points are there to suggest that the correction can happen, okay. But so far the correction is not happening. The reason being that on the daily time frame, this is something that we had spoken last week as well. The blue line, which is the 40-day average, that is
Right.
not breaking. That is true for Nifty. That is true for the mid cap index as well, and that is true for the small cap index as well. Right? The place where the 40-day broke was Bank Nifty, and you can see that it is relatively weaker to all the other indices. Okay, and also to think that a bigger up move can unfold, especially when the RSIs are at elevated level at say 85, 90 levels or so, which is where, for many of the index, you will see RSIs, at basically on the weekly chart. When it are at those elevated levels, ideally we would want a time-wise or a price-wise correction to unfold. Okay. So that's why we will be a little more patient in our approach, and we will see how the data points are unfolding. And unless we don't see data point unfolding, the way we want, or it is, otherwise, if it's reaching to any extreme, till that time, we would want to see how the structure unfolds. And it is only when the data point gets to any of the extreme that will be our action point. Okay. So until then, the market is a bit tricky to summarize. Okay. Market is looking toppish, and many of the indicators are pointing out towards that. But the only thing is that we are not getting confirmations on the price action. Okay. Because, many of the viewers who know the market and who have seen the market over a long period of time, they know, and they might probably understand as well, that there is a lot of fraud that is building in, say, PSUs. Because you imagine, FACT is one company, okay, in PSU, which is into fertilizer, which is much, much, much smaller than a company called as Coromandel, which is a very big company in the fertilizer space. Okay. But right now, given the way the madness is in the PSU index, okay, this stock is actually 60-70% market cap wise higher than the larger company. So this is basically a smaller company, but this is trading almost 170% of the larger company, which means I think I was checking that Coromandel has a market cap of say somewhere around 32,000 crore. Okay. And FACT is one company which is a smaller PSU company that is trading at say 50,000 market cap company, whereas the profit is half of what Coromandel is doing. So, such is the madness. And we have seen, time and again that all these sort of jackup happens because of low float. Okay. So low float में क्या होता है कि the public, I mean, जो public जो shares जो trade कर सकते हैं, that is very less. Okay. So it takes a smaller amount to jack up that stock. And that is what seems to be happening in many of the PSUs. So there is somewhere that froth building. And just to summarize, market seems to be moving higher, but it is losing momentum on the upside. And there are many, technical indicators you can say, or many of the studies that are pointing out that a cool off can happen. The only thing that is lacking right now is a price confirmation. And that's what we'll watch out for in the days to come.
Okay, wonderful, Jay. Thank you so much for that. That brings us to an end to a very insightful session. In fact, if you haven't tried Strike as yet and haven't put your hands on the sentiment indicators on Strike, you should do it right away. I'll leave a link down below in the description. Strike offers a 7-day free trial, and that's a lot of time for you to, test trial, see what all you like, so that you can commit to it. And also do follow Strike on Twitter, because that is where we update our daily posts with all the information that we derive from Strike itself. Yes. So thank you very much, Jay, for your time. And I will see you in the next midweek. Yeah. Take care.